Hello traders, Adam Hansen here for ValidTrader.com and welcome to video 1, the introductory video for professional trading systems and the professional trading portfolio. Now if you're new to the way that we do things here, whenever we start a new system we will start it on demo until such times as we gain an understanding of how it trades and we are confident with the way the system is trading. Start on demo first, and then pending that we will move it to a live account and track its performance under live trading conditions with real money. And then from there 25% of any of the profits made from the system whilst trading live will be donated to the ValidTrader charity of the month. So here we have professional trading systems, professional trading portfolio. And it's actually it's a portfolio of two of their systems, which combines the professional breakout trading system and also the professional reversal trading system. They work basically completely opposite to each other. They were designed by these guys to complement each other. Both systems trade the euro-dollar only and trade on the 1 hour time frame. Now, the original system they developed was the professional breakout system, and basically how it works, it's a mechanical strategy that trades intraday only, and it looks to capture those large volatile sort of breakout style moves. And the way they will do that is establish the short-term intraday trend of the market with the use of a short-term trend filter. And what that will give them is where the market is likely to move to with a short-term perspective in mind. Once they have established, or once the breakout system has established the short-term trend, what it will then do is look for a particular point where it wants to enter the market. Now this will be based on where it gets in and where it gets out, the size of the move that it's looking to capture. Will be based primarily on recent market volatility. So obviously if the market's extremely volatile, then it's looking to capture a larger move, and vice versa. If it's a time period of lower volatility in the market, well, it's not looking to capture as much, bearing in mind that it is an intraday trading system. Now this particular one will look to close all of its trades within one session. So it's not looking to trade or hold trades over trading sessions. And this also applies to the stop loss that the trade uses. It's also based on recent market volatility, so you don't want a really tight stop loss when the market is swinging all over the place. And regardless of whether the position that it is in profit or loss, it will close the trade at the end of the day. Now, after trading this system for a while, professional trading systems started to think, well, if we're able to capture these large breakout moves, which are quite commonly followed by large retracements, is there a way that we can play with the logic and enable an alternative system to capture the reversal side of the breakout? And that's when they developed the professional reversal system to try and capture that. And the way this system works is basically it will wait for a significant move in one direction, for example a breakout that the professional breakout system may have indeed captured, and its entry is based largely on recent volatility on the daily time frame. So what it will do at the start of every new trading day, it will recalculate two levels in both directions, and in the event that either of those two levels are hit, and once again those levels are based on volatility, so in a highly volatile environment it's looking for quite large swings, in a less volatile environment we're not looking for such large swings, but it will if either of those two levels are hit, then that doesn't necessarily mean that it will enter the market, but then what it does from there is once that level is hit, it then uses an alternative reversal indicator that they have developed to determine whether or not a reversal is in place after it hits that level, that predefined level that it established at the start of the trading day. So once the level's hit, it's then looking for a strong enough reversal. If it gets a strong enough reversal based on its proprietary indicator, then it will look to enter a trade in the reversal direction. And once again, with volatility in mind, in a highly volatile market, the reversal that it will be looking for after that level is hit, it will demand a much higher or a much stronger reversal in a highly volatile environment. And in a less volatile environment, after the level is hit, it's not necessarily looking for as strong a reversal, as it's not congruent to the current market conditions. Now, in terms of an exit for the professional reversal system, it will look to exit the position by the end of the day. However, if certain conditions are met, it will hold the position for longer if it needs to. Now, some key points that are critical to the success of both systems. With the professional breakout system, obviously we'll be paying close attention to where it decides to enter into a trade and the size of the move that it is looking to capture. And conversely, with the professional reversal system, essentially what it's trying to do is pick a top of sorts to a large impulse move, which can be quite risky. So obviously we'll be paying close attention to where it is looking to enter into a trade based on that reversal indicator, and also the size of the move that it is looking to capture as well. So if we just have a look at the professional trading portfolio page, so this is a MyFX book or a link to a MyFX book verified real-time performance chart of the portfolio that's been trading since the start of 2015. So 163.88%. So that's getting updated as we speak. So that's still a current tracked account. We've got a bit of information about both systems, what I've pretty much just gone through. There is a 30-day trial period for the professional portfolio system. And if we just continue to scroll down, we can see this is the combined performance. Now this is a back test, a 16-year back test of the systems from the 1st of January 2001 to the 31st of December 2016. So we can see the combined results of both systems in these stats here based on the back test. So total return over that period of 848%. Average annual return of 53%, total number of trades between the two systems of 1,971, which equates to 131 trades per year or 2.35 trades per week. So it doesn't trade all that often, which is fine. I mean, it's not necessarily how often you trade. It's can have a lot to do with the results of the trades that it does make, which is important. A winning percentage of 58%, losing percentage obviously there of 42%. Average winning trade percentage of 1.82 and average losing trade percentage of minus 1.46. So some promising numbers there. We're winning more trades than we are losing, and our average winning trade is around 20-25% larger than our average losing trade. So that's good to see. Largest winning trade of 21.78% whilst risking a fixed 2% on the account, which can be adjusted in the logic of the system, which I'll go through a bit later. Maximum drawdown of 17.7% and a return to risk ratio of 2.99 to 1. Now, if we scroll down a bit further, we can see this is an account that they were running with the portfolio system. Started, was it July last year and concluded in November. So they've claimed to have added 918% in 4 months. I think their target on this account was 900%, which they were able to achieve. Obviously, I mean, it was performing extremely well up to this point anyway. The fact this looks like potentially one large move that was captured, which has taken it up to the 918% level. I mean, up to that point anyway, it was probably sitting at around 400% profit over that 4-month period anyway. So that's still very encouraging, but just bearing in mind that we just need to take this for what it is. So this is one large move. I sort of hold this in higher stead, this performance over this period than this one move here, because I mean the likelihood of this move here recurring is obviously less likely than this quite consistent performance over an extended period of time. What could be a little bit misleading, or not misleading, but hard to gauge by this chart is just the size of some of the drawdowns, because obviously we're talking here from this point here to this point here is 400% gain. So some of these drawdowns are quite large, or could have been quite large. I'm not 100% sure what they would have been, but we just need to remember the size of the numbers we're dealing with here. Some of these dips could have been quite substantial in terms of the account. Now, what it uses is an advanced money management system as well, and basically, it's not martingale. It's not any sort of hedging system. It's basically just a money management formula that professional trading systems have developed in-house, which you will get access to when you subscribe to their system as well. And you can read some more information about it there if you like. Scrolling down a bit further, we just find out a little bit more about how the systems work, which I should have gone through already. There's a calculator there also that you can use. I mean, obviously, take the results of it for what they are. Past performance is in no way a guarantee of future results, so it is a calculator, but it's we don't yet know how it's going to perform in the future. So scrolling down a bit further, we see price for the professional trading portfolio, $1,960, which is a decent saving, I think, off the individual systems themselves. They're about $1,400 US each. So you're looking at there around about an $840 saving by purchasing the portfolio. And as mentioned earlier, there is a 30-day return policy for the portfolio. Ideally, I would have liked to have seen something a little longer than that, given that the systems are only trading, 2.35 or something times every week. You're not going to see a lot of activity in 30 days, so it will be hard to gauge, especially when we're talking about that sort of price point. It's going to be hard to gauge accurately the performance of a system based on, we might see maybe 9 or 10 trades over that 30 days. So it's a bit difficult to justify a 30-day return policy. Maybe a 90-day return policy as a bare minimum would have been ideal, but 30 days is where it's at the moment. We'll take a quick look at the fully verified MyFixBook account that we've set up for professional trading systems. So obviously no trades have occurred as of yet. However, you will be able to track this account via the full review on the ValorTrader website. Given, like I mentioned, we're only seeing around 2.5 trades per week, we might actually make the videos every 2 weeks for this system, purely because we're just not going to see the activity that we have seen with previous systems to warrant a video every week. So yeah, so you can follow that via the full review. We'll just take a quick look at the trading platform that we'll be using. We'll be using Global Prime for this test. And as you can see, we have a looks like a pending order set up as we speak. So I dare say that has been made by the professional breakout system. So obviously we're looking to, it's saying that basically if the market reaches this point, then it's looking for the market to move even further. So it's established that as an entry point. We've got our stop loss in place. And I'll just have a quick look for you at the settings of this system itself. So here we have the two systems. So magic number 1 refers to the breakout system, and magic number 2 refers to the reversal system. Scroll down a bit further, and we can see EA1 and EA2 fixed lots or minimum percent. So the way this works is the minimum percent, the algorithm will always look for minimum percent first, and if there is a number in there other than 0, it will look to trade based on that. So you can adjust that in line with whatever you feel comfortable with. So if you wanted to trade fixed lots, for example, so a fixed lot size regardless on volatility, then you would simply put a 0 in the percent, and then it would read the 0 and then look to trade or look to use the fixed lots instead. It will always look for the minimum percent first. So basically how that works is it's a dynamic lot calculation in line with recent volatility. So if you're risking 2%, then based on recent volatility and the size of the stop loss, it will adjust the lot sizing in accordance with the size of the stop loss, which is based on the volatility. So hopefully that makes sense. Scrolling down a bit further, and that's just about it for the settings. So in terms of getting the EA into MT4, if you're not quite sure how to do that, I have created another video which walks you through how to install expert advisors onto MT4. Professional trading portfolio is no different. It installs in exactly the same way as any other expert advisor would. For this particular test, we are using a $1,000 account balance. So that's pretty much all I wanted to cover in this introductory video. Like I say, we will probably do the videos every 2 weeks for this system, purely because of the infrequent trades. So I'll look to bring you another video in 2 weeks' time. In the meantime, you can track the performance of professional trading portfolio via the ValiTrader website. That's VALITrader.com. I will leave a link directly to the full review below this video, in addition to a link to professional trading systems as well, so that you can check them out for yourself. Indeed, if you've enjoyed this introductory video to professional trading systems, please ensure to give it a thumbs up before you leave. And you can also subscribe to our YouTube channel to stay up to date with any future video releases for professional trading systems or any other automated trading software or anything else to do with trading that we are using. So until our next video for professional trading systems in 2 weeks' time, happy trading and bye for now.